Amid the raging Omicron variant of coronavirus, all eyes are on Finance Minister Nirmala Sitharaman's fourth union budget to be presented on 1st of Feb. The disruptions from the pandemic weighed heavily on India's fiscal metrics last year, with the central government's fiscal deficit rising to an all-time high of 9.2% of GDP in FY21. However, the story changed in FY22 with a better-than-expected tax collection. Subsequently, the deficit this fiscal is likely to be around 6.8% of the GDP. Now, as things look relatively promising from growth perspective, some reduction in pandemic-related spending could be on the cards. Besides, tax buoyancy may further allow the government to go for fiscal consolidation this year. That said, the Indian economy remains fragile and growth volatile. Therefore, markets expect the government to roll out more supportive schemes for agriculture, the rural economy, micro, small and medium enterprises, and social sectors to provide for income generation. But before we get into the details of the budget wish list, let's understand why the onus of the economic recovery could be solely on the government this time.
It is very important to understand that there is no room for monetary stimulus this year. Since inflation is becoming a major threat, central banks will be tightening monetary policy in 2022. The Fed is likely to raise rates by 3 or 4 times this year. ECB also will follow suit. In India, the MPC will be raising interest rates this year. So in brief, there is no room for monetary stimulus. The RBI is not in a position to continue the accommodative monetary stance and monetary stimulus in 2022. Therefore, the onus of stimulating economic growth is on fiscal policy, and therefore the government through the budget has to do much of the heavy lifting as far as economic growth is concerned.
As a result, markets expect a substantial increase in public expenditure by the government during Budget 2022. Against this backdrop, Hemang Jani, Head Equity Strategy, Broking and Distribution at Motilal Oswal Financial Services, lists 2 areas that market will eye.
Because of this COVID cases which we've seen in the last, let's say, about a month or so, there is going to be some expectation and pressure on the government to provide some sort of relief package to the most vulnerable sections, particularly SME and restaurants and a few affected sectors. That's number one. Number two is that you have elections coming up in a few states where particularly rural side there has been some stress or some issues in terms of the slowdown and the fertilizers not being available and the slowdown in the spend by the government. So there is going to be that expectation to have some sort of allocation for reviving the rural economy and particularly the agriculture side, fertilizers, so on and so forth. The rest of the focus would be clearly on the industrial growth, how to provide some sort of a momentum to the already stronger economic growth that we are witnessing by having significant reforms, particularly from the corporate sector and the key important industrial segments.
VK Vijay Kumar of Geojit Financial Services also says that along with these announcements, the markets will also eye a clear roadmap for fiscal consolidation.
Another important market expectation is a roadmap, a clear roadmap and timeline for fiscal consolidation. Fiscal prudence need not be top priority in a crisis like the present pandemic crisis. But it is important to appreciate the fact that India's debt to GDP ratio is at 90%. And the centre's fiscal deficit alone is around 6.8%. Therefore, there is a problem regarding financial stability if things go out of control because of some unexpected triggers. We need not strive for a drastic reduction in fiscal deficit, but the finance minister should lay down a clear roadmap for fiscal consolidation, a clear glide path for normalization of a fiscal deficit.
Hemang Jani of Motilal Oswal further believes a clear indication of financial stability could be the only gift to investors this budget.
You have economic growth in place and pro-growth policies by the government, and you don't have any major disappointment on the fiscal deficit, or something that would mean that the inflation and the interest rates are going to really run up in a big way. That itself is a decent enough gift to investors, because that will bring in a lot of stability in terms of the stock markets and the way the entire financialization is progressing in this country.
He also believes markets may see a steep rally if there is any announcement by the government that simplifies market participation, provides growth framework and streamlines capital market activity. Coming to the budget wish list, Hemang Jani says investors want reforms for startups and boost foreign investments in the sector.
People are expecting some specific package for the startup and to boost investment, particularly from the foreign investors in the Indian startup ecosystem. So you may expect something on that front. It will not necessarily be in the form of some specific package, but some sort of a tax incentive for investors when they really invest in a startup ecosystem, or some benefits to the founders or people who are starting up, those companies. So there might be something on that front. I don't think having reversed the long-term capital gains tax or the dividend distribution tax, there is going to be any major change, because the government would not want to, make any major changes there, because consistency is going to be important. So we think that, you may expect something for specific this unicorns or startup part per se.
Overall, markets have pinned hopes on the FM to announce a budget that provides consistency in reforms, is pro-growth and assures financial stability in the country.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.